Most homeowners believe the only way to lower their monthly mortgage payment is to go through the expensive and stressful process of refinancing, which costs thousands in closing costs and resets your 30-year clock all over again. However, there is a little-known feature offered by most major services called a mortgage recast that allows you to lower your monthly bill significantly for a simple administrative fee of usually just $200 or $300. Unlike a standard principal payment, which shortens the life of your loan but keeps your monthly bill exactly the same, a recast actually reamortizes your remaining balance over the existing term of your loan to produce a lower required monthly payment while letting you keep your original low interest rate. This strategy is an absolute game changer for people who buy a new home before selling their old one, because once that old house sells, you can take the cash proceeds and apply them to the new loan through a recast to drop your payment instantly. In this video, I am going to show you the math behind why recasting is often superior to refinancing and exactly what you need to say to your lender to initiate this process.